Good morning. It's the crypto day morning. Let's start this video off by mentioning that risk reward management for myself is always job number one. I see this trading game as just that, a game. And in games, how good you are, or not matter how poor you are, will oftentimes, if not all the time, always resemble how your net results are going to play out. It wasn't that much of a surprise that Babe Ruth had a lot more home runs in his career than former shortstop Manny Lee. And you probably never heard of Manny Lee. He played in the 1980s and the 1990s, and he might have got 7 or 8 or 20 home runs in his career. But when you're that when you're that skilled, you're going to do well. And the one way to get good is by practice, by understanding the situation, going over different mechanisms in which, you can use to overperform the market or thus increase your portfolio. Okay, so within Bitcoin, sideways consolidation, and first off, these 4 days, the differential is like a little over 50 points, so it's like 1.2%. Then over these days, because quite frankly, this day, there has not been a high or a low that has been greater this day since the breakout day. So that's 4 days before it. Now we're on the 4 after it. So a 9-day stretch with price volatility. Well, the low on the top says 3,915. That takes 85 to get it to the top. And then 56 on the other side. So that would be like 141. That's a little over 3% over the last little over 1 week. So to say that it's microscopic volatility would be an understatement. Meanwhile, it has done so in an act of correcting in that of time, as this move breaking above the 18 has managed to get back within it. Before, when this was the case, the 18 of highs was like 38.90, and it was rising between 37.40 to 37.85. So with the more important straight line of 38.80, we already can see the 18 lows is above it, and of course that one is as well. So this is that big spot. Okay, is it able to hold, stay above where it came from? Well, it's held well above it, given the fact of its extreme low volatility. And within that low volatility, well, it hasn't, of course, gotten out and break above yet, but it's going to do one thing or another. And I'm not here to try to predict it, but it is thus far showing a bullish signal on this up move. But overall, when we look at this on the grand scheme of things, and I guess we'll just do the weekly with this few candles, there's been a decent decline. It's just having a little sideways consolidation on that level. And on the monthly term, I guess you could say the same thing, but in this case on the upside. Let's move on to the altcoins, starting off with AID, which is now at 1,300 Satoshis, levels not seen since it broke out from where it was at on March the 23rd, 2 days ago. A little over that, but 2 days having a move up, move down, move up, move down. And this is the coin that always does it, coming back to where it came from its moves. Use the 18 average band to understand where the trend is, so it's obviously in an uptrend. And it doesn't really have those down moves. It only has the up ones. What's more important, buy orders or sell orders then? And I'm not going to answer that because I already know the answer to that. And I'm looking to buy still. I'm looking to buy to this level of resistance here at 1,200 from my last sale at what was around a little south of 1,600. And let's move on to Theta. I'm not surprised it has down today. The down move is in that of right now 7%. And I'm going to draw a line roughly around the 3,000 number. I think this is roughly there. And I mentioned this was like sort of it's definitely the same market ideology of a head and shoulders pattern, with the neckline being where I drew it in at 3,000. And It's not like it came down to this and it just magically hit that neckline support. No, in fact, if anything, I would have originally liked the neckline to be where it is now, only because that's where the previous resistance is, which means it's just barely touched where it came from now. But throwing that part aside or getting to that side later on soon, it established support here. It then did what the next step a head and shoulders pattern would need, and that is to break above established resistance for another leg higher, which is what it did. And then the weakness to a head and shoulders pattern is the fact that it doesn't go down and hold where it needs to, which is, well, where it came from. So it would have been 38.26 and about 3,500, that little general area there. Instead, it bursted down through it and then matched this previous low. Thus, that's your next stage to the head and shoulders pattern, because it's going to probably rally from there. And it did, but not too well. So, I mean, I just can't see a nice little right shoulder, but it was almost like a dysfunctional one more than anything. Just seeing how this played with the 18. It just stayed with the lows, kept the weakness on it. At first, it was supporting it. Then it dipped below it on the dates of the 19th and 20th. And then for the next few days, it was resisting it. When did it break down below this level? Well, just recently. Let's take a look at this on the single-hour term time frame. And it last supported effectively this period here. Let me remove the advertisement. So on the 2100 hour, 9 o'clock New York City time, 2 nights ago, so today's on Saturday night. And then it rallied up to this point here. So it had that very good rally, making it to levels not seen in several hours, breaking out above the 18 average of highs. You get well above the 18 average of highs. I've said this oftentimes. Now I need to see it hold and stay above pretty much where the 18 highs is. It didn't do that. And then when it last hit this support in here, well, it came down. Now we resist it. We established short-term support at 29. And of course, it's just been going down ever since on the single hour. On the 15-minute time frame, there we can see more of this key level, this little failed move. And if we even take a look at this back at the event scene at the end of right around in here on the 1 minute, and it had a lot of its entanglement starting at 2144, chopping up and down there for more than a half an hour, and there was that rally breaking out above to 3,000, and even short term. Now, oh man, 3,000 is like the upper part of it, really important short term. And then you have that little move. So somebody bought big in here. It didn't sustain itself and held the 18 highs for a few minutes, but it was just that. And then as we can see when it goes down there, it's just a good move. And as far as what happens, it never ever, of course, gets above that on the short run. On the weekly, weekly, excuse me, yep, weekly, this market was beforehand going up. So therefore, it would have been a rising 18, resistance established, and this was its correctionary move from this rally up in here. This is when Binance opened the exchange up. In fact, you know what? I can just show the chart because I remember it's on Huobi here now on TradingView. And its correctionary move, in looking at such, was bigger than I thought. In fact, it came back down to a previous low. It wasn't one of those ones where it held where I would have wanted to, which would have been in here after this rally. For it did, it comes back to the 18 lows, but it has what really is a failed breakout, although oftentimes from failed moves can create fast moves. Well, this wasn't one of the times. It had the move here, but it wasn't fast. So from the event, it obviously did hold at this re-established level of support, or held what was already established, but when it first started, just establishing it even much further. This move in here was about 29 change, even low 29s on Huobi. It was about 3,600 up here on Binance, which meant that if you happen to be at the computer on Binance when it was 3,600, 35, you were able to get better than a 20% arbitrage at that given moment. Now, of course, you would have been better off selling and waiting for it to go down, but even if you did sell here and buy here, well, you would have made a 20% gain. In the more recent term now, from this breakout, leaving the 18 highs, established resistance, has 2 weeks where it chops going sideways, follows up with 2 good green candles up, thus making it to pretty much all-time highs. It's hard to count this one. That was like a right off the bat sporadic large buy. But at the same point, it's really just a matching high, pierce above this at the same point as well. But after a move like this, significant, many periods to go up, not just one of these flip ups and back down instantly. It's very important for me to see this hold its correctionary test, which is just beginning on the long term. 18 average of highs is in at 28.50, so it's basically there. 18 average of lows right now is in at 21.34, and it's rising. It's a new week now. So this number can only go lower than that if price action goes lower. And it will because of the front-weighted mathematics. It's an 18 average. It takes each period and it multiplies the current by 18, the previous by 17, and 16 before that, and so on to 1. It takes the sum of the numbers divided by 171. So the highs just takes the highest price. So in this case, 29.87 multiply 18. And then 34.50 times 17. 45.99 times 16, so on and so forth. And then it divides it into the average to get it on a front-weighted level. And then the lows, same thing with those numbers. Here's no limit coin number 2. And it's showing strength, I guess, within the 18 highs. It's resisting it, but it's coming nowhere near the lows. And in yesterday's session, it was up 0.38%, closing at 264. Now it's up 4 points, up 1.52%, which is pretty close to being right, I guess. It's just when we look at this on, say, a shorter term time frame, and these lines represent where I'm buying and selling next. The 1 minute, we'll say, we'll use. I haven't seen this one yet, so I'm going to see. How do we explain why this always looks the way it does? Let's take a look at the market. And what we're looking at is 9 o'clock. The last trade, 273, 272. This is one buyer. Buying an okay amount, 10,000 here. And push number 2. And, well, the 9 o'clock all started here. It started off with a sell, though. And then we can see at the exact same price time, it becomes that of a buy, which is really interesting. And then, a minute before then, there was a small sell at 265, but 8 o'clock, we have a buy 269. And at the same 8 o'clock, we have a buy 68 and 67, but we also have that exact same time. Sell at 263, 263, 64, 64, and it's got to be some sort of computer script. But when you look at all the rest of the numbers on here, it's 6 o'clock and 22 seconds, you're going to see the same thing. Then we have 5 o'clock and 20 seconds. That within the same point, you get a sell and a buy. I'm trying to grasp that, other than it's definitely got to be within a computer's automated script. And let's conclude this within DGB. And at 308, at levels not seen since it broke out above March the 9th, 16-day lows. It's retracing from the 400 barrier, so down about 90 points. 90 on 300, that tells me its volatility. That's close to 30% since that move. But as far as where it's going to go, I've had this 303 line in drawn for a little while. I just stuck it in there because of this resistance, this exact level of 303, this level of resistance in here, as well as this area in here. It to me resembles where it came from. Usually appears as extra. And definitely thinking that here. And that's because after it had its move, leaving the 18 average of lows from here to here, 4 consecutive days going lower after all this sideways correction. And that's when I talk about Bitcoin to start the small moves. It just means that it's in indecision correctionary mode until one of the next big moves, either up or down. And this is one of the ethers that went down. So it took 4 days from here to here. But then we had 3 days of going sideways. So the market digested its losses. No enthusiasm to bring the market higher, at least nothing of any significance, or even close to any significance for that matter. And it has barely now broken down below the level of the established support in here, which was first in at 311, and then it settled in very short term at around 313. So as it plays, I mean, to me, 296, 294 seems to be like the minimum target I think it's going to go to. Just a good pierce below here. To me, I just don't think this is that big of a move. I look at the three little bears analogy, where something has to be right. If it's too hard, too soft kind of deal, too hot, too cold, just right in the middle. Well, up, down, I don't want up or down, whatever the move is. This one's down. I don't want it down too little or down too much. Although technically, having moves that go down too much and up too much over and over is, as a trader, what I want. But throwing that part aside, this would be too small. Somewhere around in here from this would be like just right. And then going down to like 267 would be too much. So that's the way I look at with that type of thing there. We also see this breaking down below the 18 on the daily. Whenever I see something like that happen, and we're going from a point A low to point A high, and it's a good one, we can see it obviously is still higher than this. So if I expand the time frame one period further, make it so I can see what's going on here, what I see is an attempt to revert the trend. It's hit stage 3. Stage 1 is for band to flatten out, which was pretty much going on during these 2-3 periods in here. From, well, I can't say that. February 18th and these 2 periods here is where it flattened out. On this period, it attempted to do stage 2, and that was establish a level of resistance. Its next period, it completed that fact because it went to 400. No, not because it went to 400, because it went high enough. It could have been 362, and this is back to that three little bears analogy or ideology again, where something like 331 breaking the 18 would have been too small. And going up to like, not like I mind though, going up to like 500 or 580 would have been way too much. Even 480 would start to be kind of high. I mean, 430, yeah, it's a little high, but not bad. Yeah, that would work. And then 400, well, definitely. And 380, sure. 342, that's getting kind of small. But stage 2 has happened. Resistance established. Tops and bottoms known after the fact. Well, when I come back down to the 18, the fact is done. That's a high. It's back to this level. It's hit this point. Stage 3, come back to the band, which amplifies a correctionary move from where you establish resistance. So thus, if you can successfully correct here, and thus when you leave it, when you get above the 18 average of highs noticeably, then that is an attempt to do stage 4, which is significantly take out 400, which would be thus turning it into a bull market. Thank you for tuning in. Have yourself a great day. Bye-bye.